Worldwide Healthcare Trust is managed by Sven Borho and Trevor Polischuk at global healthcare investment specialist OrbiMed. They aim to generate a high level of capital growth from a diversified portfolio of global healthcare stocks. Performance is measured against the sterling-adjusted MSCI World Healthcare Index. The trust's managers can draw on the extensive resources at OrbiMed, which is a leading global healthcare investment company with a proven track record across public and private equity and debt markets. It has around $17 billion of assets under management and 12 offices across the world, including in New York, Shanghai and London. The company's team consists of 140 professionals, which includes 36 people with advanced medical degrees and 16 company CEOs or founders. They invest in every healthcare subsector, across all geographies and at all stages of a company's life cycle, selecting stocks on a bottom-up basis. OrbiMed has employed a public equity portfolio review process since 2009, whereby Borho and Polischuk meet regularly to discuss the trust's portfolio structure and individual holdings. Topics include clinical and regulatory events, and new drug launches. Stocks are selected from a universe of around 1,000 companies, and the trust's portfolio is diversified by geography, subsector and market cap. The managers seek companies with underappreciated product pipelines and strong management teams, which are trading on reasonable valuations. They also have good access to unquoted companies given OrbiMed's large private equity team. There is a disciplined portfolio construction approach and also a rigorous risk management process. Although the trust experienced a difficult period of performance in recent years as growth stocks, which its portfolio is biased to, struggled in a rising interest rate environment, the trust has a long-term record of significant outperformance versus its benchmark. The main features of the trust's portfolio are its long-standing overweight exposure to biotech and an underweight allocation to pharma stocks. Within biotech, the managers favor emerging, smaller cap, rather than larger businesses, as although these companies are inherently riskier, their risk-reward profiles are deemed to be superior. Over the long term, this strategy has been significantly beneficial for the trust's performance. Innovation within the biopharma industry is very strong, which is driven by novel technologies including gene editing and therapies. Two-thirds of the industry pipeline and more than 50% of new product approvals in the last decade have been sourced from biotech companies. Also, the regulatory environment remains supportive with a record number of novel drug approvals in 2023. The trust has benefited from robust healthcare M&A activity as several portfolio companies have been acquired at meaningful premiums, both direct holdings and those in a proprietary M&A basket. Activity should continue as pharma companies need to bolster their pipelines ahead of a major upcoming patent cliff. The healthcare sector has historically provided relatively robust annual total returns. There is a wealth of opportunities in the global healthcare sector across a range of subsectors: pharmaceuticals, including specialty and generic businesses, biotechnology, medtech devices, healthcare services and life science tools. The US is the most developed healthcare market and makes up more than 70% of the MSCI Healthcare Index. US healthcare stocks delivered an uncharacteristically poor relative performance in 2023 in a narrow market dominated by large-cap technology stocks, which may offer an interesting entry point to the sector. If you would like to learn more about Worldwide Healthcare Trust, please visit www.edisongroup.com.